Hi everyone, welcome to this time Scrolling Finance. Well, last week was the final week before the 80th anniversary of the nationwide war against the Japanese aggression with September 3rd. Sentiments in the China stocks market were still positive and hit the 3,888 points. But somehow China's bonds market didn't behave more sensitive to the stocks market than before and performed more independent. So as always, let's have a quick review of the bonds market, then check out the details part. Alright? Total bond yield curve was twisted and stiff compared to the week before. Yields of 3 and 5 years terms went down 3 and 0.2 basis points. Yields of 10 and 30 years terms went up 5.6 and 6 basis points. If we compare to the one of December 9th last year, the curve was still twisted and flat. Yields of 3 and 5 years terms went up 9.4 and 4.7 basis points. 10 years term went down 8 basis points and 30 years term went up 2 basis points. The spread between Chinese Treasury bonds and commercial bank perpetual bonds enlarged a little bit, with 5-year spread was 55 basis points. After actions of investment agencies in last week for short and middle-term bonds, funds and securities companies bought 127 billion yuan together. City commercial banks, agricultural commercial banks, and joint stock banks sold 258 billion yuan together. And for long and ultra-long-term bonds, funds and securities companies bought 98 billion yuan together, whereas joint stock banks, big banks, and policy banks sold 94 billion yuan together. Next, let's check out details part and see what happened last week. In terms of fundamentals, first PMI data came out. The manufacturing one was 49.4, slightly better than last month's 49.3, and which thanks to anti-convolution policy. Looking forward, maybe the production side will start to stand in its equivalent tunnel from now on. Second, the China stocks market, which experienced a big decline last Wednesday but still stood above 3,800 points firmly. On the one hand, the performance of the stocks market has been stimulated by a bunch of demand policies and carried by the anniversary since August. And next Wednesday is the parade day, so the stocks market has already hit the ceiling of this period of time. On the other hand, China's bonds market wasn't sensitive to the stocks market like before. The stock bond seesaw effect was weaker. So it is crucial whether the stocks market maintains its positive performance after next Wednesday. Then, from long and ultra-long-term view, now fundamentals backs up the bonds market, and the effect of the stocks market is shrinking. So buying a little long and ultra-long-term bonds won't be a bad chance anymore. For funding conditions, the total vibe was loose. The PBOC invested almost 500 billion yuan liquidity last week. The financing price for non-banking agencies decreased to 1.4% around, and the economic recovery needs loose monetary policy to support. So from short and middle-term view, bonds with short duration are safer. What should we pay attention next? First, the performance of the stocks market after the parade. If it can last the rise, well, it's time for the bonds market to fight back. Second, the economic data and financial data. Put our eyes on the extent of the economic recovery, alright? Third, monetary policies. We knew that Jerome Powell probably start a new cut cycle in the near future, so our PBOC has its chance to decide whether to follow it. About bond investment strategies, if you are a big gambler, you can just buy some long and ultra-long-term bonds to ambush. If the stocks market goes down after next Wednesday, well, you will get the cherry at the top of the sundae. Or, for the safety feeling, you can just buy more short and middle-term bonds to take care of both trading gains and risk control. Anyway, the outline will become clear next Wednesday. Let's just watch out. So as always, if you want to know more useful finance information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding experience and waiting for you. So bye guys, until next time.